afternoon, ladies and gentlemen, excellencies, distinguished guests. As was said, I'm Danny Sebright, the president of the U.S. U.A.E. Business Council. I'm honored to be here today with all of you. Have been working and helping promote the U.S. U.A.E. trade and business relationship for many, many years now, including in the area of space. Very exciting to see what we're doing, what the U.A.E. is doing. Its vision, as always, is something to be lauded and greatly respected in this region. I'd like to thank all the panelists today for participating in this year's Global Space Congress, and especially the large audience that's here coming from all over the world to help talk about these important issues. The Global Space Congress, of course, is a showcase for increased international cooperation and collaboration in the area of space. The UAE's vision with regard to space is bold. It has many, many experiences and needs much cooperation for partnering in the future. And I think the panel today will draw out some of those opportunities in perhaps a new area or an emerging area that hasn't had a lot of light of day originally in the space program throughout time. I think back to when the space program started in the United States, and it was almost exclusively, if not all, funded by the public sector, by the government, with heavy research and development from industry, the private sector, but paid for largely by the government. Look how that's evolved over the years, how it's progressed to where we are today, where we're talking about entrepreneurs and angel investors and venture capitalists on the stage today to talk about opportunities for investing in commercial space. And also the risk and the differences in the way that risk has changed and the way it's evaluated today. Those are some of the topics that we'd like to draw out with our panel. And we have a very distinguished panel. First to my left is Dr. Marcell, Tessenyi, and he's project manager for the Twinkle mission and CEO of Blue Sky Space. He's responsible for the day-to-day programmatic activities with an overall view of the Twinkle project. Marcell has a PhD in astrophysics from the University College London in exoplanet spectroscopy. His contributions to space instruments include European Space Agency's M3 candidate mission, ECHO, the M4 candidate, Ariel, and M5 Specospace mission concepts. Dr. Marcell Tessenyi is from Budapest, Hungary. Then we have Mr. Mark Boggett, who's managing director of Seraphim Capital and has 18 years of venture capital and technology investing experience. He is also on the board of directors of Cavendish Capital. Prior to Seraphim, he served on the board of YFM Equity Partners and was also an equity analyst and fund manager at Williams, DeBrow, and Brewin Dolphin before moving into venture. And Mark is from London. Next, we have, I'm sorry, I'll make sure I get my right. We have Joerg Kreisel, who specializes in technology commercialization with a strong focus on space, has been involved in numerous international activities in both space and early stage equity finance since 1987. Joerg serves as a board member of several high-tech startups and venture capital funds and is also a lecturer at Space Tech and ISU. Joerg holds a degree in aerospace engineering from RWTH Aachen University in Germany and is an alumnus of ISU and is from Aachen, Germany. Finally, we have Mr. Chad Anderson, who's the CEO of Space Angels Network, where he has invested millions of dollars of private capital into commercial space ventures. He is also a non-executive director of the UK Space Catapult, where he supports the national strategy to grow the space sector in the country, and is board director of Waypaver Foundation, where he forwards the goal of sustainable lunar settlement. Very interesting backgrounds, all of the speakers. What we're going to do is let them each speak for about 5 minutes and offer some comments and thoughts on this topic of investing in space. And then we have a few questions we'd like to throw at them. I'd like to throw at them, have a discussion, and then open it up to all of you. And this is also an opportunity to learn more about how you from the audience can be involved with some of these venture capitalists, angel investors in financing of space for the future. So don't hesitate, have your questions ready. So why don't we start, please, with Marcell Tessenyi, doctor.
Thank you very much, Danny. For a start, I would like to thank the organizers, the local organizers, and also the U.A.E Space Agency for hosting us today. I very much liked your description of the transition of space being something that's driven by government only and then slowly progressing into different areas, eventually resulting with the panel today with private investment being taking a significant role in the space sector. We are on a journey which has taken us from a very academic background. We are a small company that's a spin-out from University College London, and we focus on space science and space exploration. So what we're trying to do is develop a new funding model, a sustainable funding model, for getting a series of privately funded small satellites for doing space exploration and science in a much more fast and effective manner than what's being done at the moment through government-driven programs. Now, we will not be replacing all of the government-driven programs. There's a lot of R&D and a lot of technical capabilities that we will not be able to compete with. But we do appreciate that there is a number of science cases and science requirements which don't require the most complex and expensive facilities. So what we're trying to do is deliver a spacecraft and a series of spacecrafts for science in a short time scale and a reasonably low-cost budget. Now, I do see reasonable because satellites for space exploration do require some amount of capability. So we're not talking about CubeSats, we're more talking about small satellites. In particular, we've been working with Surrey Satellite Technology, who are delivering platforms which are very effective for the kind of science that we're trying to achieve. So what you could consider that what we're doing at the moment is almost an analog to crowdfunding for space science. Essentially, what we're doing is we're raising capital to be able to provide satellites as a service for a global astronomy community, a community that at the moment doesn't necessarily have access to satellites directly unless they're located in a certain number of selected countries which have their domestic capabilities. So what we're doing is essentially giving an opportunity for a scientific community to buy time on satellites that will be built specifically to upcoming scientific challenges. Now, as part of that, there is one problem with what we're doing, is the cost of building a satellite. These satellites are still expensive pieces of hardware, and as a consequence, the financing of these objects is something that's complicated and does require a lot of thinking and perseverance. So we've been working on developing this new model, and hopefully we'll be able to enable a series of sustainable satellites for space science.
Hi, good afternoon, everybody. Mark Boggett from Seraphim Capital. I've spent my career in venture capital, and I'm currently the chairman of the most active seed fund in the UK market. I've been running Seraphim with my partners for the last decade as a generalist technology venture fund. And we've recently launched our latest new fund, which is called the Seraphim Space Fund, which, as the name suggests, is focused on the space sector. Now, this fund is a pioneering new fund in that we've got investment as limited partners from a range of large corporate space companies and technology companies. So in the list, we include the likes of Surrey Satellites, Airbus, and technology companies like Teledyne. What we're looking to do is focus this fund on exciting new opportunities that are emerging within the space sector. So the majority of our focus is on trying to invest into companies that are using data from satellites, the downstream application market. And that cuts across some big themes like the Internet of Things, the smart cities, intelligent transport, as well as interesting verticals like insurance and maritime and so on. The other area that we're going to be focused on are technologies that enable space. So this includes the obvious like satellite technologies, laser communication, but it also includes other technologies that are converging at the moment that will be important to the market going forward. Things like data analytics, artificial intelligence, drones, robotics, new materials, a very broad range of technologies, all of which, for us to invest, have to have a relevance to the space industry. The corporate backers are really helping us by having some expertise in this market that will enable us to be able to use their resources to help us with our due diligence. And as we go through that process, hopefully they will also want to become customers of the companies that we're engaging with. In relation to the downstream market, we've got a member of our team that's considered to be the poster child of this industry. So Michael Jones, who's our partner based in Silicon Valley, was the founder of Google Earth and CTO at Google for many years. So he brings an expertise for us to be able to identify some of the most promising companies in the downstream application market. So this is a £100 million fund. Well, it will be 100 million when we close our second close at the end of April. And we're focused on A-round investments. We've also started an initiative that runs alongside the fund, which is spun out of our partner group, London Business Angels, called UK Space Tech Angels. And this is a group of 50+ business angels that we refer our seed stage opportunities to that will invest in companies. So between these two organisations, we're going to be investing in a significant number of businesses in the UK, Europe and overseas over the course of the next few years. So every quarter we'll invest into three seed stage businesses and 1 A-round business. So over the course of the next 5 years, that's 80 companies, 60 seed stage companies and 20 A-round companies.
Yeah, hello, my name is Joerg Kreisel. I want to share a couple of perspectives and observations made over now 30 years dealing with space commercialization. And when I started out as an aerospace engineer in the late 80s and dealing with tech management, and we started to do first commercialization activities, getting space-related know-how and technologies into terrestrial markets and working on bigger things. Of course, we figured it was hard to get money, and for any of these commercial opportunities or investment opportunities. Then in the next decade, I personally happened to end up as a venture capitalist, as a partner investment director of an international fund. So we were the first people in the 90s investing in space-related startups outside the US. Unfortunately, our fund was not focused on space, so we were rather limited. However, what was experienced in the 90s that one was looking at the overestimates in the past. It started with the expected exploitation of microgravity. So that was a big thing in the 80s, and when we're thinking of making money out of this, that didn't happen. When we set the German hypertechnology program, I was heavily involved in this. A lot of business proposals came up. It was almost impossible to get funded. The 90s were totally different because that was the era of the big LEOs. So in satellite telecommunications is a totally different field. And a big community came up, and nowadays SATCOM business is a mature industry, and financing schemes behind and everything like insurance is almost as mature as it is in aviation, and that is a total separate ball game. Then as far as equity for space is concerned, there were a couple of eras in the 90s. John Higginbotham, based out of Western Virginia, started with Space West and basically pioneered dedicated equity investment for space venture funds. So, and these guys moved on. A couple of things happened. The expectations with Earth observation-related business also did not meet expectations. Aldis came much later. There was a couple of other attempts where funds were set up and sort of failed, or at least did not meet expectations. To me, it is very much also a matter of culture and understanding what's going on, understanding the tech generators in this community. There were a couple of investors coming from the outside trying to make investments and didn't really warm up with the community. That was pretty much an observation in the 90s till around about 2005. Following the internet bubble, which started in 2000, it was difficult also for other venture capital funds to raise money, and that also was at least retarding our investments related to space. I personally spent a lot of time in the Silicon Valley in the 90s, and we met with all the big guys and looked into a couple of things. I was personally heavily involved in the creation and the early years of Rapid Eye, and these were quite interesting experiences. But in essence, most of the startups or space-related commercial or investment opportunities didn't find money. And to a large extent, this still is the case as of today. In my view, major events were in the first half of last decade, the privatization of Inmarsat by Apax and Permira, big private equity funds, put space, although it was SATCOM business, on the map of private equity with incredible returns, good multiples, and that became kind of a game changer to some extent. Although satellite communication industry is primarily funded by leverage, structured finance, later stage debt, and these types of things. Another very important event, and that is what was sort in my view the foundation of the new space world nowadays, was the creation of the X Prize. And then, of course, a company being set up by Elon Musk, like SpaceX, et cetera, et cetera. So we have seen a lot, and we still do see a lot of business plans related to space, space-enabled business, space-related business, core space business, new space from all over the world. And over the long time, we see that things are getting better. Business propositions get better. Industry has learned. However, I think that the mechanisms of finance, the types of finance, the approach to getting to raising money are not fully understood yet in the industry. There's still a bit to learn, but we see a lot of good things. So for instance, Space Angels, we will hear more, doing a great job in kind of making this, particularly in the new space arena, known to the public, creating a lot of buzz and momentum. I think this is incredible. Also good kind of outreach activities. And now, since about 2015, we see a lot of new activities, and I'm very excited and confident that we see a couple of things. But coming back to my initial statement, I personally believe it's still a cultural issue. Investors need to be some sort of, as it was pointed out by the previous speaker now, need to be part of the family, need to understand the market, going into depth of the things. And let me conclude my initial words with a short joke, and that describes very well where we are when it comes to venture investment or these kind of risk-taking outside investors. You know, in the engineering and science community, in particular in space, nowadays better, but it used to be for a long time that people were sort of afraid dealing with the financiers, the guys in the dark suits, you know, kind of buying in cheap, ripping us off, selling off high, you know, it's always very suspicious. So there's the following situation. There's this guy who ends up at a hospital because he needs a heart transplant. So the doctor goes to see the guy and says, hey, listen, tomorrow we're going to change your heart, but by accident we got two hearts in the fridge. So, and the one heart belongs to a 21-year-old athlete who this year participated in the Olympic Games. He died in a car accident. And the other heart belongs to a 55-year-old heavy-smoking venture capitalist. So tell me by tomorrow morning which heart you want. So next morning, doctor goes back to the guy, to the patient, and says, hey, have you decided which heart you go for? And he says, yes, I have. And so what do you want? I want to have the heart of this 55-year-old heavy-smoking venture capitalist. And the doctor goes, okay, I'm surprised, I respect your decision, but could you tell me why? And the guy goes, yes, I want to have his heart, it has never been used. Okay? So.
Thank you for that injection of humor. Chad, please.
Yeah, thanks. And thanks, Danny, and thanks to the organizers. We're very happy to be here. Space Angels Network is a group of 230 accredited investors across the globe. We're in 25 countries now. So strong global presence. And we've been doing this for 10 years now. So we're celebrating our 10-year anniversary this year, which is pretty exciting. So, and when we started in 2007, we had 4 members. It took all the way up until 2012 to get to 20. And today we have 230. So that's the kind of hockey stick growth that we're seeing across the sector. And to give you a little bit more of a flavor of that, there's a launch company that you've probably heard of. In 2009, they took their first commercial payload to space. They employed and put to use a lot of you know, automotive type manufacturing processes and things like that. And they get a lot of credit for that and bringing the price of launch down. And that was a big, significant achievement and a big step forward for the industry, I think. But what they also did was publish their pricing for the very first time. You could, if I was an entrepreneur and I had a great idea for a satellite company, I could now go and create a business plan because I knew how much that rocket cost, right? There was a brokerage service that was built on the back of that pricing, and they would buy the rocket and split it up. And now, if I knew I wanted to launch a small satellite, then I knew how much it cost to do that. For me, this was the dawn of the entrepreneurial space age that we see today. And we are tracking a great deal of companies. We have good data on the sector, who's raising what. And what we can see is back then there was, a few dozen commercial companies operating in the sector. And today there's hundreds. Not startups with PowerPoint presentations, but startup companies that have raised capital. They've convinced someone else to put money into their business, and they're out executing on those business plans. So that's a very important distinction in my mind. And to see that kind of growth and that kind of diversity is really what gives the sector its strength today. The sector is, we're in a place where if you're a commercial space company, you are working not with just one government customer with, or through cost plus contracts. There's an ecosystem that you can tap into of partners and customers and things, and many other commercial ventures to work with. And today, we're in a scenario where if the sector can handle a failure or two and still be all right. So I'm very excited about how robust the industry is today and this type of really meaningful growth that we're seeing. You also see that space is a very large market, 330 billion. And it's promising to see the shift to commercial as well, right? And so we're at 76% today of the market is commercial, and that wasn't always the case, and that ratio is increasing all the time. So for us, we're very excited to be here in Abu Dhabi. The Emirates have been very forward-thinking and have accomplished quite a lot in a very short period of time. From the investments into Virgin to the development and the designing of their spaceport to the satellites launched to the new space agency being established and looking forward to the Mars probes and rovers. So we're very excited to see how the Emirates play into our global future in space in an era where we've seen, big five space agencies really dominate the landscape for a long time, and that's definitely not the case today, with many more space agencies coming online and doing amazing things. So, thanks.
Chad, thank you for that. I have a question for you first that's sort of just very much my personal interest. I noticed and I read a little bit about your charity work with the lunar settlement. Will that happen in my lifetime? When do you see us, the world, putting the first sort of sustained, life on a satellite or on the moon or on another planet? And will it be the moon before Mars?
Well, that's the real question. I think that a lot of this is happening a lot quicker than people, at least the general public, give it credit for, or they realize. We have invested in a lunar transportation company. Very real company, very real revenues, very real customers. They're planning to launch in 2019, and I have high hopes for their technical progress is pretty astounding, but also the market and how it's unfolding and how it's developing is also pretty fantastic. You see, there's long-term demand coming from the European Space Agency and their desire to establish a lunar village with a number of international partners involved. And there's been a lot of pent-up demand for the moon for a very long time. And so I think that we are just scratching the surface, and we're going to start to see, the groundwork being laid, a lot of the robotics being taken to the moon to set the stage, so to speak, start to develop some habitats, help to establish some communications networks, and power, and all of the other things that you need to survive. And I think that we're going to see, there's some really exciting things that are going to happen in the next 5 to 10 years. The Mars versus moon debate is a bigger one, and that's been going on for a long time. And the one point that I would like to make there is that, the people who want to go to Mars straight away, they view the moon as a distraction. Fair enough. The people who want to go to the moon straight away say that can be used as a launch point to get, because there's an architecture in place to be able to go from the moon to Mars's moon and then down to the surface. And that makes a whole lot of sense as well. But there's a third option when it comes to asteroids. And you're seeing a lot of attention being played there, and we're going to see a lot more developments throughout the year. But the thing that I wanted to point out is that I don't think that it's a choice anymore. With these hundreds of companies, we're not reliant on, monolithic, the big five to be supporting these things. With the numbers of new space agencies coming online with different ambitions and the number of companies that are involved, I don't think we have to choose anymore. I think we can do them all.
Thank you. That was, I really was interested in that. Let's bring it from Mars and the Moon to the U.A.E. because the U.A.E. is in the middle of this wonderful Project Hope to launch a probe to Mars by 2020 and 2021. What are the opportunities here in the Emirates, both to raise capital in these interesting vehicles that you're talking about, and also to deploy capital for some of their programs for the future? And I'd like to hear a little bit of a take from all of you. So why don't we start your sense of how can we get capital here, and how can we deploy it as well?
Okay, well, for a start, the fact that there is a space machine being developed for going to Mars indicates a very significant interest in developing science capabilities. And actually, what we're providing with our activities is a risk-free way of getting access to science and really world-leading and high technical quality science. And of course, there are some risks involved with developing space missions. And what we see is that there's a transition in quite a lot of countries around the world where there is more emphasis being put on developing national capabilities. And that's, I think, for the benefit of science in general. What we think where we can help with is actually provide a quick shortcut at the same time to developing the research base and the research capability that would be exploiting the data by actually providing really as a service access to facilities. So I think when it comes to capital, it's, from our perspective, it's mainly about acquiring capital to have access to facilities, international facilities, and develop international collaborations.
Acquiring capital from here or bringing capital to here?
So from our perspective, it's about acquiring capital from universities and institutes that might be interested in developing their science capabilities.
Okay. So the U.A.E. is rich in sovereign wealth from the carbon resources that it's had over the year, from the wonderful diversified economy that it's creating on the ground here. And a lot of people would think, well, they can just pay for this. They don't need to bring capital in from abroad. But Mark, talk about that.
Yeah, so I've looked at what's going on in U.A.E. and it's very similar to exactly what's going on everywhere else. And that is around the creation of technology hubs. Most space companies that I come across, that I'm interested in, the entrepreneurs don't even recognize themselves as space entrepreneurs. They're just entrepreneurs. So part of the thing that's going on in U.A.E., as everywhere else, is the creation of these technology hubs, incubators and accelerators. So I understand in the U.A.E. there are currently 12. If you roll that back 5 years, there was 1. And that kind of growth, and that growth is accelerating significantly, is the same the world over. And what's good about that is, and this is why we've got a real platform for growth of these technology businesses going forward, that it's an easy point for international investors like ourselves to be able to come into a territory and quickly identify where the technology opportunities are within different themes. And because I take a sort of a broad view on what space-enabling technology is, I need to look in many of the different incubators. I need to look in smart cities, I need to look intelligent transport, I need to look at the digital, I need to look in the general. And that's all happening over here in U.A.E. The other thing that's happening in U.A.E. Is about success. So success breeds success, and success of ventures leads to entrepreneurs creating companies and coming to the market. So I looked in U.A.E. as to how many unicorns that had been successfully formed. So for those that you don't know this term, it relates to companies that have privately backed that have grown to a valuation of more than $1 billion. So I identified 2 companies in the U.A.E. that are unicorn. And one of them, in my definition of the word, is a space-enabled company. It's called Karim, and it's effectively a copy of Uber. And if you switch the satellites off, its business model doesn't exist. So that, in my definition, is a space-related technology business. And the U.A.E. has already got its first unicorn.
And before we go on to Joerg, the regulatory environment, the banking regulation, you're comfortable with all of that here? And I mean, a lot of folks from other parts of the world who might not know this part of the world or this region very well might say, well, is my money safe there? And the risk of deploying my capital. I mean, just a word or two on what your research you've done and what you know from your perspective.
Yeah, so I have to hold my hands up, and I can't thoroughly answer that question. In other jurisdictions where we have issues around that, we'd often get the company to create a vehicle in a different territory. So you just have the holding co in a different territory like America or somewhere in Europe.
We'll go down the list there, and if the rest don't answer it, then I'll come back and answer the question. Joerg, go ahead.
Well, maybe just to catch up on that last comment. Yes, I think the regulations and these types of things, I don't think that is a big stumbling block because it's a matter of structuring. And there's different ways of doing this in nowadays world. And so for investors, it's issues like repatriation of profits and these types of things. So it's kind of common stuff everywhere. And there's workarounds here and there's solutions to this. I don't think that needs any special attention. There's enough people who know about this and there's ways of optimizing that. Coming back to your initial question, how about the money here in the region or the position of the U.A.E.? I think this very place is not the place to vary for money, right? I mean, here is a lot of money. It's more the question, and the question is, and I think the U.A.E. is in a rather unique position, having jump-started into this space agency with a rather young space sector, etc. I think they can, here in the U.A.E. can probably pioneer a couple of new developments. And I personally, I have to admit, I agree 100% with everything which has been said here, in particular what Chad mentioned earlier. So he gave a good pitch on what's happening in the industry. And I think, I don't know whether you know, I was for 15 years special advisor to ESA on commercialization and investments in particular. And looking at the European environment and also what's happening in Asia, when you look at what you mentioned, the accelerators, incubators and these types of things, which build backbone of a kind of a downstream or genuine technology transfer ecosystem, apart from the real space projects. What has been accomplished over the last 15, 17 years is that a lot of investment went into space from different sources, equity. What we are lacking yet is a lot of visible high return exits. So if that was accomplished, it would even accelerate the process, you know? So we have, I think, just the ESA incubator Bavaria last year raised, the incubatees raised 30+ million euros, a couple of companies. You know, it's quite impressive, you know? So if you compare this, and we have a lot of data points from all over the world, how this develops. The U.A.E., in my view, and actually I wasn't prepared for the question, but I think kind of getting the feet wet with kind of new developments, new funds, new investment vehicles, be it in the country or all over the world. That is something where I think the U.A.E. could easily tap in and help for mutual benefit to kind of have window of technology kind of activities, investment activities, bringing know-how and technology to the country to support their own activities, to create socio-economic benefits on the ground, as well as being part of interesting developments elsewhere.
We've heard about the vision, and I think folks have heard about it all day long. It's a hallmark of what's happening, what characterizes the U.A.E. throughout its history. We've heard about the great resource, but a lot of people don't know of the great discipline here that is inherent in the people of the U.A.E. and to execute on the vision in a very professional, thoughtful, methodical way. And I think that combination for what all of you do just creates a wonderful, wonderful place to be doing business. Chad?
If you don't know about that, then you haven't been paying attention, because if you've seen what's happened over the last 40 years, it's stunning. I mean, so I would say what cultivates a robust commercial entrepreneurial space sector is probably three things: heritage, capability, regulatory, an accommodating regulatory environment, and a established or well-functioning, ecosystem in terms of capital flow into companies and that sort of thing. So, as has been mentioned already, I mean, there's quite a lot of progress happening in terms of the incubation centers being set up and these tech hubs. There's a number of angel networks that exist here and in the area, and so that is definitely in a very good place. The U.A.E. is, in terms of space policy, is right out in the front of the pack, with the U.S. and Luxembourg, who recently passed some significant property rights in space, and the U.A.E.'s working on that and signing up to that in combination with a much larger package of space policy as well. And the capability is coming very quickly. So, I mean, from what we're seeing is, the will, the resource, and the capability coming together very quickly. And so, I'm last in line, so I've completely forgot the question, but I hope that sort of answered it.
That's good. Before we go to the audience, thanks for that. Before we go to the audience for some questions, let's just sort of step it up a level from the U.A.E. to the more global perspective of what's happening in your sector right now with the financing of space. Mark touched on risk a little bit, and I just want to ask all of you to say a few more words about return on investment, the calculation of return on investment, how risk plays into that. How do you see the industry developing in these ways? What worries you? What are your concerns, especially as all of you are trying to look at interesting deployment of capital in new and different ways? Mark, just a couple of sentences and we'll go down the line.
So the reason why we've just launched a space-focused venture fund is we believe that the opportunities within space are now comparable with opportunities in other sectors. So largely, I don't differentiate between the two. I believe that there's better returns to be made, and we're at the front of the queue in order to do that. But I think that talking about risk and how we price risk, we're in an industry that embraces risk, and that's in a very different way to the space industry does. So when we invest in a seed stage business, we're acknowledging that we're likely to face 90% failure. When we're investing in the A stage, we're acknowledging we're likely to face 50% failure. So the way that we price the things that we're investing into, taking those sort of percentages into account, we need to make sure that we can make the return that we are shooting for out of the balance of the portfolio. So we need to work out whether we need to make 10 times our money or 20 times our money, or whatever the figure is that makes it sensible given the risks that we face and that we embrace within the stages that we're investing at.
So I meant to start with you, but please go ahead.
That's fine. Yeah, for us, risk is certainly a factor that comes into play. I think the moment you're raising capital for something that might blow up on a rocket, it is certainly something that's a cause of concern. Regarding the development of what we're doing, I think it's a bit difficult sometimes to make sure that we can actually satisfy all the questions and the issues that come from the fact that you're doing something for which a market is not already in place and for which you're not showing that you're replicating or growing something that's already being done. Given that we're doing something that's quite innovative and that's been government driven, I think showing and demonstrating that what you're doing can be done is really a key challenge. And I think when it comes to the calculation of return of investment and these kind of issues, probably overcoming the first hurdle and demonstrating that this model works is something that's a priority, following which I think the calculations on ROI become a bit more straightforward.
In the Defense Department, we say that's crawl, walk, and then run. So there you go. Go ahead, Joerg.
Well, when it comes to returns, I think there's two generic perspectives. One is you look at a certain company or an investment opportunity, and as an investor, from an investor perspective, you are one investor, or maybe you assemble a couple of investors which best fit the deal. You put the round together, and then, like in all investments, you have the investment, you have the kind of holding period, or you add value, and then you exit. And and that delta makes a return, right? The capital gain multiple, whatever you put it. That's one perspective. It's on a case-by-case basis. From another perspective, if you were a space-related or space-focused a dedicated investor. Then you have a portfolio view, right? So, and then a portfolio typically develops in venture. It's kind of you have a few high flyers, and you have these on-target deals, the living deads and the lemons in a portfolio, and you want to make sure that you generate some returns. Now, what makes this latter perspective a bit difficult is, just to give you an idea, I think you're fine if you kind of get as many times the money back as the money stays in the company, let's say 5 years, 5 times money back. From that upwards is kind of a good investment, you know. And we see this in a couple of high-tech portfolios where this is the case, at least not only with the upper quartile funds. But what is very important, though, is, and that makes it a bit difficult, at least it takes some consideration, is deal flow. Deal flow is key, quality deal flow. So what is quality deal flow? What is the deal flow in space? We have kind of straight constellations, we have core space activities, new space, we have technology transfer, genuine tech transfer with satellite application, downstream ICT, we have spin-ins, we have a couple of things, and then kind of selected opportunities across the core space value chain. And this ecosystem, as Chad pointed out well. So, what does that mean? This deal flow on a global basis, from a global perspective, is very fragmented. It's fragmented in terms of geography, where are the deals, in terms of technology, systems, time frame, funding needs, market specifics, and so forth. And that makes it a bit difficult. So the question, which was in the theme of this session, how do we calculate the returns, is a challenge. It's much easier to answer on a case-by-case or on a sector basis, rather than for space as a whole. That's my take on it.
Okay, thank you. Chad?
I think the diversity point is a good one, because we get that question a lot as when you're looking at space and you're an industry-focused group, how do you get that diversification that's supposed to help you manage the risk, right? Well, space is a big place, and the market is equally big. So it spreads across, you know, anything from satellites and launchers on the near-term side to, you know, planetary markets on the other end to everything in space in the middle. There's a lot out there, and investing in one isn't necessarily tied to the outcomes of the other. There's a lot of interplay there, but there's a lot of interdependence as well. There's two common misconceptions when investing in space. One is that it takes significantly more capital to invest in space companies, and two is that it takes a much longer time to get your money out. And that's a great anecdote, and I hear people say it all the time, but we went and ran some numbers, and we looked at the data, and we looked at deals done in the space industry, and seed, Series A, and later stage, and we compared that to VC generally. And it turns out that in seed and Series A deals, they're exactly the same. The average size of investing in a space company as seed and Series A is exactly the same. Starts to get a little bit wacky in B and C, because later there's actually, you know, there's not enough to really be statistically significant. So, you know, but it's not as out of whack as you would expect it to be. And so that was quite eye-opening. So there goes, you know, myth number one. And number two is that you can't, it takes a long time to get your money out. But, you know, we're looking for returns in the 5 to 7 year time frame. We sometimes take a slightly longer view, but I mean, look at the typical venture capital fund is 10 years. They invest over a period and they're looking to get their money out, you know, in 5 to 7 years. So that's really the target range. And we've also got, you know, we've gone through and looked at the data, and while the industry is still very young, remember I was talking about 2009 as really the launch point for all of this entrepreneurial activity. It's still very young, and there's not a lot of data points to point to, but there are a number of exits that have happened, you know, within that period of time, which bodes very well for investors in looking to get returns here. And even in the absence of a number of exits, we've got a number of cases of companies who have gone out and raised subsequent rounds at higher valuations. So continuing to make progress and convince external parties to put more money into the company. So myth number two dispelled. So yeah, I mean, I think that's really a couple of key points on risk.
Couple points real quick before we go for questions in the audience.
You know, I agree that the lack of exits is really, you know, holding back new entrants from the funders into the market. But I believe that there's now a stock of businesses that are in that 5 to 7 year old range that are going to start exiting over the course of the next few years. We're going to see some IPOs, we're going to see some good exits. What's really interesting from my perspective is who are going to be the buyers of these businesses. And I don't see them being the traditional incumbent space businesses. And this is really going to change the market. So I think it's going to be the generalist tech investors that are routinely acquiring businesses. And we've seen something like this recently with SoftBank coming into this market, writing a £1 billion check to invest, which is a toe in the water for them. But at the same time, I think it heralds new investors come into this market, and they're likely to be the future acquirers, and they pay good prices.
Good.
Once that starts to happen, we'll see a wall of money coming into the industry.
Well, I think the last 2 comments on this question is very, very crucial. In the past, it was like, you know, space-related investments, long lead periods, massive upfront investments, that kind of stuff. So it made it difficult to get money out or money in first. And so why was that? Historically, everything is based on phase project planning. So we saw a lot of businesses, all the way from rockets to satellites to exploration and that kind of stuff, which was, give us 500 million and we make you happy in 10 years or 15 years. That seriously doesn't work. But it's also about structuring, and we see a lot, and Chad was referring to the various stages or rounds of finance. It is about structuring and kind of early revenues or kind of generating a first rise in value and then bringing in other investors and working from round to round. So it's milestones, milestones in terms of business and finance, which are not compliant with the system or technology phases. And that makes quite a difference. And we see the industry has learned a lot over the last 10, 15 years, that we see more kind of well-structured propositions rather than going for the big thing and not getting the money to go even halfway down the road. And I think that structuring issue is very, very important.
Thank you. We're getting the sign that we're getting a little close on time, but is there a mic, roving mic handy back there? Could you bring it up to the front to this gentleman sitting right here? This is a close friend and colleague and an official with the U.A.E. government in Washington, D.C. in the embassy, and his name is Talal Casey, and he's been very focused on bringing venture capital and angel investors to the U.A.E. and has a wide experience in telling the story of an opportunity of startups here. So Talal, give us a minute of what you'd like to say.
Well, I also had a question, so I was going to put my hand up. But no, I think, you know, in terms of trying to galvanize and promote the startup ecosystem over here, we've done this in many different sectors by incentivizing companies within certain industries to come and establish in the U.A.E. And I think right now with the new space policy in the U.A.E. and the technology roadmap that's being developed, we're going to see a lot of that in the space industry to help companies come and set up and hopefully succeed with their space initiatives here. I love the example of other countries like Luxembourg who have looked at asteroid mining and in situ space resource utilization and promoted that and stood right behind that, especially after the US issued their Commercial Space Act and the right to own the space ownership rights. So I think we're going to see somewhat mimicking of that with the U.A.E. in terms of how we would incentivize the industry to set up.
Thank you. One last question in the audience. Does someone have something they want to say? Right here in front, please, the mic. Okay, you're going to run to the mic. I like that. Thank you. Go ahead. Please identify yourself.
Yeah, sure. Hi, I'm Christine. I'm with Inc. magazine. I'd like to know from you, I know you touched on it slightly earlier. When we as journalists speak to VCs and the founders of funds and also the entrepreneurs on the ground here in the region, not only in the UAE, but the GCC and the Greater MENA region, a common thread that they come up with is there's a disconnect between how much money there is in the region and how much is being invested in entrepreneurship. And of course, the UAE is doing a lot to facilitate, a nurturing of that disconnect. But one of the things that always comes up is that VCs and other funds and things aren't as sophisticated yet. And so something like space tech, funding that is also, like you said, you're still learning with the dynamics of funding it, and especially with VCs and things like that. How do we go about education for VCs and other people starting funds and funding entrepreneurs here in the region?
Anyone have a comment? Chad, have you been?
Yeah.
Please.
I mean, keep doing this. I mean, this is great. So we have a good relationship with the agency here and a number of organizations here, and we always are having those types of conversation, right? So it goes back and forth, and we have some members of ours are from the region as well, but it's the same in a lot of different countries as well, right? Is that it is established. I mean, the entire angel and VC thing is very new in its own right, right? I mean, VC is 50, 60 years old, right? And angel investing came on the back of that. So angel investing is only 20, 30 years old, and it's still trying to figure out what it is, right? And so doing it, following the same steps and doing it in the exact same way is probably not necessarily the best way forward. But the beautiful part is that, there's been a lot of trial and error, and there's a lot of learnings there that can help, people and organizations, countries really leapfrog. It's the concentrating of all of this into these tech hubs, centers of excellence, whatever you want to call them, establishing a place for these people to come and meet, and then getting the people wherever they are in the world, local or otherwise, to come and come to those places and share stories and develop the programs themselves. But I think it's going swimmingly.
Yeah, I mean, I'd say the same thing. You need to have angel networks. They're already established. You need to have companies that are being created and the support around them. That's already happening through the Dubai Silicon Oasis and a whole range of other activities. And then you just need a bit of time for those things to sort of come together. And as Chad said, hopefully they'll learn from other people's mistakes, but mistakes will be made. From the government perspective, there are things that they can do to accelerate that. So a good example, something that's been going on for 20 years in the UK, using a tax incentive scheme to encourage private investors to invest into private early-stage businesses, take some of the risk out by offsetting it against their tax. That's the kind of thing of bringing more investors into the market. And then some successes. It's important that there is some success, so that when there are successes, that they are well publicized and talked about, and that encourages more people to come in and to try it themselves.
And the UAE pressing and being on the cutting edge of this, of course, creates a model, creates an example that others in the region can follow in the GCC and in the wider region and learn from. And it's happening. I see it every day. Did you want to say one last thing, please?
I think this education element in it, or awareness campaign type thing, is very important. For information, looking here at the UAE, and we were just told about the new activity, I think that is very good, because with regards to new business creation in the space domain, etc., these approaches are way ahead of the situation we find with some of the older and established bigger space agencies and space policies in other countries, where I personally believe that with regards to space commercialization, there's still a gap, and the policies and the agencies are not yet up to the task to support and incentivize both investors and the companies. One is doing good things and they're getting better, but we're by far not there yet. about how to do it in the region. We were charged by the Union of Arab Banks from 1995 through 2003 to develop venture capital training for the Union of Arab Banks and also in this region. It's quite interesting, and then what came up was the Islamic Sharia compliance issue. And when you look at it in detail, there isn't actually no conflict with Islamic Sharia, with venture capital. It's a matter of labeling. When, you know, the way how you do that. I think that is a very important thing which I'm missing in the whole discussion as far as the region is concerned, compliance with Islamic Sharia. However, we have some of the largest sovereign wealth funds here in this country or in this region. We have a couple of very interesting investors, not only being active here, but also other places of the world. So I think it's about maybe joining funds and developments, other parts of the world, and then bringing people here and companies here. So it's about, it's a chance now, you know? I mean, you have a strong space program and innovation policy for the country. You have this regulatory support incentive schemes, whatever you name it. And now there's a big chance to do this and to expand globally. And in consequence, then bringing stuff back here, and this will be for mutual benefit, also helping other spacefaring nations and companies in other countries.
I think we all agree it's an exciting time to be here in this part of the world, to be looking at these sorts of issues, looking at this sector in particular. And I, for one, am just really very proud to be associated with the project as it goes forward for the mission to Mars and other things that are happening. Ladies and gentlemen, please get a warm round of applause for our panelists today, taking the time to be here to talk to you.